Supermicro up 12% today, but still struggling to bounce back from a series of accounting issues. The company giving disappointed, unaudited financials this week after its accounting firm resigned. One AI platform has been sniffing out suspicious transactions at the companies for years. Kris Bennatti is CEO of Hudson Labs. Her firm first flagged risks at Supermicro in 2022. So, Kris, this is fascinating because this is sort of the intersection of a fascinating story in the stock market and the hottest story in the stock market, AI. So tell me how that works in terms of what your platform does, what your large language model does.
Yeah, so as a financial AI platform at Hudson Labs, one of many things we do is look at the concentration of related party risk across all U.S. issuers. If you think about related party transactions and other types of forensic risks, it's an incredible application for AI because it's unstructured data. It takes a lot of time to dig through all of that, but also there's a lot of noise, and that's one of our biggest contributions to the space is getting rid of boilerplate, finding the signal versus the noise. But because of that, we have a related party concentration risk screen, where Supermicro was one of the highest risk companies and simultaneously was ranked quite high on our other forensic risks.
Right. Yeah. So this screen is a result of going through hundreds of thousands of SEC filings, because that is time consuming. Nobody wants to go through one SEC filing, let alone 800,000 a year.
Exactly. And in a situation like related party risk, a lot of related party disclosure is meaningless, boring, and not material. So if you're trying to do that using a keyword search, it's going to get you mostly information that's irrelevant, which is why you need a more specialized model that understands content, context, et cetera.
So this screen, which flags Supermicro, the related party risk, it flagged the ties that Supermicro had with AbleCom, as well as CompuWare. And AbleCom, I mean, there are a lot of people out there who are deep into the Supermicro story, but AbleCom CEO is the brother of the founder and CEO of Supermicro. So there's a lot of strange ties there as well.
Yeah. So Supermicro was flagged on multiple screens. The most interesting one was, of course, the related party concentration risk, because it was one of the highest risk companies for that risk category. And you're right, it was a very unusual web of family relationships with both AbleCom, CompuWare, and also interesting, the terms of those relationships were very clearly not commercially normal, at least from where I'm sitting. One example is they were selling into CompuWare at below market prices. That's all available on the public record, and I think one of many things that was abnormal about both the AbleCom and CompuWare relationships.
So thanks for coming on. It's really interesting what you do. I'm wondering, so related party, that seems like a fruitful place maybe to look. But what about things like channel stuffing and, inventory marking, things like that? Can you do it as well with those kind of, I guess, I don't know, those are the keywords or however you want to think about it?
Well, that's exactly what's so interesting about both the CompuWare and the AbleCom transactions is they're set up in such a way where when I look at it, it almost looks like it's inviting both round tripping and channel stuffing. CompuWare is both a manufacturer and distributor, so they're coming in two different ways. And for both AbleCom and CompuWare, there's the option to ship on consignment versus sale. There's just a lot of discretion when you look at the details of those transactions, which would, to me, as an ex-CPA, raise questions about, is there an opportunity there's absolutely an opportunity for round tripping and channel stuffing. Whether or not it was in fact happening remains an open question. But the fact that they were doing it in the past and settled with the SEC for these types of issues does increase the risk.
I'm asking this question hoping you know the answer, because I'm not looking to tee you up, but you have a proprietary forensic risk score calculator.
Yeah.
Anything over 70 raises your antenna. If you were to go back and look historically, how many times have you got a reading north of 70 and then equated with a stock sort of falling out of bed, being able to short the stock based on that score and being successful doing it, if that makes sense?
Yeah, we have some great backtesting on our website, but it's very highly used by people who are actively looking for short ideas, which speaks to its accuracy, also highly correlated not just with price collapse, but also things like class action litigation. But really what we're testing against is, does this relate in SEC enforcement action in the next 3 years? And that's how we evaluate efficacy.
Any companies you're going to unveil in terms of landing that north of 70 score?
If you'd like to know more about which companies are high risk, I suggest becoming a Hudson Labs subscriber. But I do want to just give a teaser that there's at least one other company on my radar with similar related party risk profile to what we've seen at Zebra Micro in the biotech space.